This is the easiest way to spot liquidity when trading Forex. Alright, before I get right into this topic, please let me know down below in the comment section what type of trader you are. Are you a swing trader? Are you a scalper? Or are you a day trader? Let me know down below. I'm very curious to see. And now we can get right into the video. So, in my opinion, the best way to spot liquidity is to look at previous highs, previous lows, or previous equal highs or equal lows. Okay, this is, in my opinion, the easiest way to go around it. I'm not going to keep it too complex because trading is all about simplicity. And that's why I said that it is super simple to understand. Now, what I will do is basically I will draw a pattern that will make you understand what I mean. So in this situation, what we have right here, oh, sorry. In this situation, what we have right here is a high, okay? Right here, we have a high, a resistance level, however you want to call it. On this high right here, what the people will do will place orders around it, okay? So a retail trader, let's say that trades support and resistance, will like to place a sell right below this high with his stop loss probably above it, okay? This is your typical retail trader support and resistance type of entry, which can work, okay? I'm not saying that support and resistance doesn't work. And once this order is placed, the liquidity sits right above. The liquidity is basically the stop loss of the order, because you can imagine that there's hundreds of thousands of people that place similar orders, and that's why we have so much liquidity sitting above this high. Okay, basically liquidity are also stop losses. That's how I like to spot them. And then what the market likes to do usually is do this. Okay, go up, then possibly reject from that zone a bit, then it goes up, it stops everyone out, it traps the buyers as well, because now the buyers would think that, oh, we broke this level, let's actually enter for a buy, and they would do this, and they will place a stop loss right below this level. And now what the market does, after they stopped out all the sellers, they fake out the buyers as well, and then they decide to go in the right direction. Okay, I'm pretty sure that you are very familiar with this type of move, that there's a lot of times when you get stopped out and then the trade goes exactly in your favor. It's because the market decided to grab liquidity before heading lower. All right, so now for the second example, it's pretty much the same thing for lows as well. Okay, we create a support level, and then price likes to go, maybe reject from it a little bit, go a bit in profit, but then it will grab liquidity and then go up. Okay, because like this, the buyers are stopped out because most of them had their stop loss right here below the low, and they also trapped the sellers that got in because this level was broken. Okay, and that's how liquidity is spot and grabbed, and then the market moves very aggressively. All right, so now for the second pattern, where we have equal highs and equal lows, when we have this, again, it's not going to be picture perfect. By equal highs, this high can be a bit higher or it can be a bit lower, okay? But above these two highs, there's always liquidity sitting above, because we think about the same concept as before. 1 second. Also, for the people that do not have time to trade Forex every single day or still struggle being profitable while trading Forex, but still want to get setups like this, I highly recommend you check out my free signal group on Telegram. The link is down below. This setup was literally sent today. It was a buy limit pending order. All we do is send pending orders, because like this, every single one of you will be able to make profits from the signals. And this one was sent in the VIP. Of course, if you want to upgrade to the VIP, where we do VIP live weekly coaching sessions every single week, you can do that from the free signal group. Okay, enjoy and thank me later. I like to mark up liquidity like this with the dollar sign. Right here, traders would like to place their sell positions, betting that, okay, this is a strong resistance level, stop loss right above, and then the exact same thing would happen. The market will come up, maybe reject from it, go in profit, but then the sellers would have got stopped out, buyers would have been trapped, and then the market would have made its move. right? So now let's actually look into some examples in the recent price action on OJPY. And we do have a lot of examples. Okay, so check this out right here. I'm going to use the bar replay as well. Check this out. So if we look at this, we have two equal lows sitting right here. One low, two lows. I mean, we could also count this one as the third low. So what people will do will say, okay, there's going to be a lot of buy orders here because people will bet that this is going to be a strong support level that will hold. And what they do is they will place their buy limits or buy orders when price gets there, stop loss right below this wick, okay? Because they consider this as a support level. And of course, if we go on the 30-minute, we can see it even more clear. But let's stick to the 1 hour and let's see what the market actually does. Check this out. Literally, liquidity was grabbed, buyers were stopped out, sellers were faked out, and now the price is actually going up in the right direction, okay? Let's check another example right here. Check this out. So we have two highs. I mean, they're not really equal, but still above this week, there's liquidity sitting. And what's going to happen? Check this out. Let's use the bar replay. Price is going up, and now you would say that, oh, it broke this high, now it will most likely go up. But check what happened next. Straight down, okay? And it usually, as I said, usually the move right after the liquidity grab is very aggressive. So how can this help us? Well, it can help us by spotting it, and then we could literally create a strategy around liquidity grabs, okay? We could literally decide, okay, after I see a liquidity grab, I would look to enter a sell in this scenario, or a buy if we have a liquidity grab. That's grabbing buy side liquidity, okay? So let's look for another example. This one, let's actually check out a buy example, and we actually have one right here, which is actually very, very cool. So check this out. We have one low here, we have another low right here, and we have the third low right here. So now that we know this, that price usually likes to grab this liquidity, we can also draw a trend line like this and mark it as liquidity. This is how I like to mark it. And we know that, okay, price will most likely go here, test the support, grab some liquidity, and then move up. So knowing this, check what happened next. Literally wicked. Oh, I think the next candle will wick even lower. I'm not sure. Let's see. Check this out. Wicked lower. Literally wicked lower. Grab the liquidity. Stopped the buyers out. And now check what happened next. Very aggressive move to the upside, as we discussed. Okay, we can see what happened. And you can literally go ahead and check the charts, and you will see that this happens over and over again. I didn't want it to create this video to be like a strategy type video. I just wanted to make you understand how liquidity works and how you can be aware of it, because I know there's a lot of times that, let's say, you get stopped out and then your trade goes in your direction. There's a lot of times that this happens, okay? And I'm familiar with it as well, because guess what? We become liquidity. Our stop losses become liquidity, and our job is to try to not become liquidity. But of course, it's hard and we will still get stopped out. So don't have the expectations, now that you know how liquidity works, to never get stopped out again, because that's far from the truth. But now you can watch the markets and view them with a brand new perspective. Okay, and this is, trust me, very, very important. Again, check this out. We have this high here. People would have said, okay, this would most likely act as a resistance. Check this out. They would have probably marked up this zone right here and placed their sell with the stop loss right above. Typical support and resistance, okay? Which again can work, but if you're aware of liquidity, you can actually improve your consistency. And check what happens. Very bullish, okay? Sellers get stopped out, and now guess what? As this level gets broken, a lot of buyers will hop in because they be like, okay, this level got broken. Price will most likely climb all the way to this level right here. And they would place the take profit there. and the stop loss right below the structure. And guess what happened next? The buyers get stopped out as well, and then the price goes in the initial direction, okay, which was a sell. So yeah, this is pretty much it. I hope everyone understood what I was talking about. If there's any questions or any unclarities, please message me down below in the comment section. I'll make sure to check every single comment out. And to recap once again, we have buy side liquidity and sell side liquidity. This is when this is buy side liquidity and this is sell side liquidity. We have liquidity sitting above highs or below lows, or liquidity sitting above series of highs or series of equal lows. Okay, by equal, I do not mean perfectly equal. A low can be a bit lower or a bit higher than the previous low. Okay, it's not going to be picture perfect. It's going to be something like we had here. Okay, I consider these two lows equal lows. Okay, so price grab liquidity here, sell side liquidity, and now it went and it grabbed buy side liquidity, okay, right below these three lows, right? So yeah, that being said, this was pretty much it for today's video. Make sure you're subscribed to not miss out on future content like this one, and as always, I will see you in the next video. Goodbye.